Let's start your investment journey.
Hi, and welcome to another edition of our weekly market outlook report for the week starting Monday, the 1st of November. We have a busy week ahead of us, which starts with Chinese and US manufacturing PMI data on Monday. On Tuesday, we should be on the lookout for RBA interest rate decision and statement. Moving on, Eurozone unemployment figures and US ADP employment change for October and ISM services PMI figures will be closely watched in addition to crude oil inventories data and Fed interest rate decision on Wednesday. On Thursday, Australian trade balance figures are due and US jobless claims data. From the central bank's activity, we should pay attention to Bank of England interest rate decision and statement. The week will finish on Friday with Eurozone retail sales figures and probably the most anticipated data release for the forthcoming week: US non-farm payrolls, US unemployment rate, and average hourly earnings. Now, let's take a look at few markets. Let's start with the Bitcoin. Bitcoin price action is consolidating sideways in something that appears to be a bullish continuation pattern. There is an energy build-up here. The price action is supported by 58,200 level to the downside and capped by 62,600 on the upside. A bullish breakout above 62,600 and a retest of that level from above as a newly found support could open the way for the extension of this bullish run to the upside, targeting additional resistances at 65,250, 67,220, possibly even 70,000 over a medium time frame. Alternatively, if we see a rejection here and the loss of these current lows at 58,200, an end of day close below that level could open the way for a deeper corrective pullback, targeting additional support at 55,530, possibly even 53,160. This is German 40 or the DAX index, which is currently creating the sequence of slightly lower highs. The price action is capped by a falling resistance trend line as well, and the key trading level at the moment is at 15,730. As long as that level holds, bears are in control. So basically a rally into that level and a rejection, or a continuous selling pressure and the loss of these lows at 15,500 level could open the way for a deeper corrective pullback to the downside, targeting additional support at 15,400, 15,300, possibly even 15,100 over a medium time frame. Alternatively, if we see a rally from the current levels and an end of day breakout and a close above 15,800 level, retest of that level from above as a newly found support, that could create a short squeeze, therefore a breakout and a trend change towards additional resistances on the upside at 15,900, 15,950, possibly even 16,000 over a medium time frame. Nasdaq is uptrending, creating the sequence of higher lows. The price action is supported by multiple moving averages and also multiple rising trend lines. Key trading level going forward is at 15,530. As long as that level holds, bulls are in control. Pullback to that level and a rally, or a gradual move higher and a breakout, an end of day close above 15,900 level could open the way for the extension of this upward move, targeting additional resistances towards 16,000, 16,200, possibly even higher. Alternatively, if we see a loss, an end of day close below 15,530, retest of that level from underneath as a newly found resistance, that could trigger a deeper corrective pullback towards additional support at 15,300. Let's talk about euro dollar. Euro dollar is downtrending. The current price action is creating a sequence of lower highs and it's capped by falling resistance trend line. The key trading level going forward is at 1.1670. We saw a rejection at that level. It initially oversold bounce back after the ECB press conference, i.e. the rate decision last week, and a rejection. So the key trading level is at 1.1670. Bears are in control below that level. So therefore a rally into that level and a rejection or continuous selling pressure and the loss of these current lows at 1.1550 could open the way for the continuation to the downside. Therefore further selling pressure, targeting additional support at 1.1530, 1.15, possibly even 1.1450 over a medium time frame. Alternatively, if you see a rally and an end of day close above 1.1670, that could change the outlook, potentially creating a short squeeze, targeting additional resistances on the upside at 1.1730, possibly even 1.18. Sterling dollar also exhibits the similar price action sequence of lower highs. The price action is creating an oversold bounce back, which is then capped by falling resistance trend line. Key trading level going forward is at 1.3830. As long as that level holds, bears are in control. So therefore rally and a rejection or a continuous selling pressure, loss of these current lows at 1.3650 could open the way for the continuation to the downside, further selling pressure towards 1.3580, 1.35, possibly even 1.34 to the downside. Alternatively, if you see an oversold rally and a push higher and an end of day close above 1.3830, that would negate the bearish outlook, potentially creating a short squeeze, targeting additional resistance initially at 1.39, followed by 1.40. Dollar yen energy build-up price action is coiling here in something that appears to be a bullish pennant. Key trading level going forward is at 113.15 to the downside. Bulls are in complete control above that level, so therefore pull back to that level and a rally, or a rally higher and a breakout out of this consolidation pattern could open the way for the extension to the upside, targeting additional resistances at 114.50, 114.80, possibly even 115.20 over a medium time frame. Alternatively, if we see a loss and end of day close of 113.15, retest of that level from underneath as a newly found resistance, that could trigger a deeper corrective pullback, targeting additional support at 112.60. Let's talk about gold. Gold appears to be under pressure here. We are seeing a corrective pullback. The longer term price action is creating the sequence of higher lows, but we also have a fairly decent resistance at 1800, 1810 zone as well. So rally into that level and a rejection would be bearish, or continuous selling pressure. The loss of 1765 could open the way for a deeper corrective pullback, targeting additional supports initially at 1750, 1736 to the downside. Alternatively, if we see an oversold bounce back and a push higher, break above 1800, psychologically important round number, could open the way for the push higher, short squeeze, targeting additional resistance initially at 1810, followed by 1818, followed by 1827 and 1834. Crude oil appears to be very bullish, although recent price action appears to be a sideways consolidation and a little bit of a profit taking against the overall uptrending market. The price action is still creating the sequence of higher lows, and it's supported by rising trend line. The key trading level is at $80 per barrel. As long as that level holds, bulls are in charge. So pull back to 80 and a rally, or a continuous buying pressure breakout above 82, 80, 83 level could open the way for the extension of this move to the upside, targeting additional resistance at 84.90, 85, followed by 86.20, possibly even 87 over a medium time frame. Alternatively, if we see a selling pressure and the loss of 80 level, retest of that level from underneath as a newly found resistance, that could change the bullish outlook, potentially opening the way for a corrective pullback, targeting additional support at 79.50, possibly even 78.45. Thank you for watching, thank you for listening, stay safe and happy trading. Bye for now.
Let's start your investment journey.